Alrighty guys, you saw by the video today we're going over the inverse fair value gaps. If you guys pay attention to the last video, I told you guys this was the next video coming out after the fair value gap video. Today we're going over inverse fair value gaps, essentially the same thing of fair value gaps, but this is using fair value gaps to trade to the opposite side. So let's do a little bit of a refresher on what fair value gaps were in case you guys forgot from the last video or you guys need a little bit of a refresher. Fair value gaps. They are a gap in trend that is lacking price action and orders being filled. So that's what fair value gaps are. It's a gap in between a 3-candle spread, sometimes a 4-candle, 5-candle spread, because we did go over in the last video how they're stacked up against each other, and it's basically an area where orders are not getting filled, and that is a confirmation confluence. Confluence. I think I spelled that right. Right. So let's go over the inverse fair value gap. Inverse fair value gap, also known as IFVG for short. Right. So those are inverse fair value gaps. So what are inverse fair value gaps? They're basically a fair value gap, a fair value gap. I'm gonna just use FVG for simplified. Let me put that right there so you guys can see. Fair value is also known as FVG, right? So look, so it is a FVG, a fair value gap that does not get respected. Now, just because it gets respected, does this mean it's a bad thing? No, this can be a completely good thing if we're trying to trade into the area that we want, or if this is a way of manipulation for us to trade in the opposite direction. So I'll draw out a little spread for you guys so you guys can basically tell what an inverse fair value gap is. We'll do it with candles this time. We did it without candles last time. Let's make this wick a little bit bigger. Okay. Make that candle body a little bigger. Boom, 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 boom. Put a wick right there. All right, candle body going in right there. All right, so we got an uptrend. So let's mark out our fair value gap, which is right here. Okay, that's our fair value gap. So now what is a respectation fair value gap would be something like this. Nice retrace inside with an extension out. As you can see, this candle came in, tapped into it, orders got filled, and we moved up. That's a respectation fair value gap. Now let's go into an inverse fair value gap. An inverse fair value gap is a disrespectation fair value gap. So basically what that means is, I'll draw the wick right here. I'll draw this body. We'll have to use a big body for this example. All right. We're going to use a 1 candle inversion. Inversions can be either 1 candle, it can be 2 candles, 3, 4, you name it, just depending on the time frame that you're using. Right? So let's say that's our inversion fair value gap. Why do we know it's an inversion fair value gap? Because this is a red candle, right? This is a candle that's moving towards the downside. So because it's a candle moving towards the downside, we got to know that the candle opened up here. This is where the candle opened. So I'll draw a little O. This is where the candle closed. Draw a little C. Because this is a bearish candle. This candle came down. What did it do? This candle closed right here beneath the fair value gap. So what does that mean? That means that essentially the uptrend is no longer valid. The uptrend is no longer valid because we started trailing down and we inversed the gap. So what could we look for here? Now, if we were looking for a trade here, we could look for another move down, right? Followed by a potential, oh my God, these candles are so bad. Followed by a potential break of structure, right? Because this candle closed here. So then we could look to short it all the way down to there. If that makes sense. I'll go over it one more time. We created an uptrend, and now a candle closed beneath the gap. It came through the gap, and it closed beneath it. So what does that mean? That means that the uptrend is no longer valid, and now we can look for moves down. Now we can look for moves down, okay? And then we could trade based off a break of structure of a low. So we could trade off a base of structure, a break of structure. So that means if we come lower than that, then we could look for moves down to the downside, right? That's it's a little heavy to understand, but I'll show you guys on the charts where those lie. But first, let me show you guys a tool that I use. It's an indicator tool called a fair value gap tool. Now, boom, so many fair value gaps marked out. These red ones represent a bearish fair value gap. These green ones represent bullish fair value gaps, and we can see some of them got respected. So you see here in this green fair value gap how price was making an uptrend, and then price came down to fill the gap. Price then came up, closed above the gap, then price also broke structure, came down, retraced into another fair value gap right here, and then price decided to long out of it, right? So that could have been a really good trade if it happened during market open. This was during pre-market, right? But that just shows you a way that fair value gaps are being respected in a following of a trend. Now I'll go into inverse fair value gaps. Let's find one somewhere back here. Let's look for a 15-minute time frame one so I can show you guys a higher time frame inverse fair value gap. Let's see. That's a respection fair value gap. That's also a respection fair value gap. Where are our, oh, found one. So look, right here, what do we have? We have a bearish fair value gap on the 15-minute time frame right here. The gap in between this downtrend. If we were to respect the downtrend, what would we have done? This candle would have came in right here and then came down like that. If that was to happen, if this green candle that blasted through it did not happen, and instead this green candle came down out of it, followed by a break of structure right here, we could have looked for shorts down to here. That's a respection fair value gap. But this is an inverse fair value gap because this green candle, this uptrend candle, came up and closed right here. The candle opened right here and it closed right there. So what does that mean? This little gap right here is no longer valid. We can no longer trade the downside. We can no longer trade it. We have to look for moves up. The candle came through, it pushed through. We got to break a structure. So what did price come and do? Price came in, price had a small retrace right here, and then price boomed, longed out of it. All because this little gap got inversed. This little gap got inversed. Inverse basically meaning disrespected, right? This gap got inversed. We shot through it completely, and now we're following this uptrend. Simple as that. I mean, just think of it as not respecting a fair value gap. Think of it as price wanting to go in the other direction. And that can be used in our favor. Because say we wanted to be bullish today. Say we wanted to do something like this. Say we wanted a liquidity sweep, an area for price to change trend. Price changing trend right there. Right, so now we got to look for a move to the upside. What do we have? We have a break of structure on this 15-minute high right there, followed by a inverse fair value gap right here. And then we have another break of structure of this high right there. And then we have a small 15-minute retrace right here. And then we're good to long it right there, right? That's just like a simplified version. I would personally set a stop loss at this for value gap right here in case price wants to come down, fill it more. But then see, that's basically it. Say we wanted to be long on this trade, then we would have seen this as a liquidity sweep, this inverse for value gap, this inverse for value gap as a form of manipulation, as a form of a respectional confluence. Inverse for value gaps don't need to be a disrespectation confluence. For inverse for value gaps can very much be a respection confluence, right? We come in, we inverse it, we respect our bias to the upside, and then boom, we're able to take this glorious position. Now I'll show you guys some more in case that was a little confusing. I know I went pretty fast through out of it. So let's find another one. No, not really. Is it? The high of this candle is 39 and the low of this one is, no, this one is 41, 39. No. Maybe there's a 30-minute one. I can show you guys a higher time frame. Inverse fair value gap. Oh, look, right here. Just found one. Got a 30-minute fair value gap right here. What did we do? Price came down. Price closed below the fair value gap and continued to move down. So say we wanted to trade to the downside. Say, for example, maybe this could have been our liquidity sweep to the downside. And then we saw this inversion for value gap off a bullish for value gap. So we inversed it. So now we're bearish. So now we can come down and target to the downside. Let's find maybe two more, one more, two more. Let's find a 1 minute one. And I can show you guys essentially today's live market, what we saw. Okay. So this is something that I personally would have traded. We have a bullish for value gap right there. So what did we come do? We came in and we inversed it right there. But we have another fair value gap lying right here. Okay. So what did we do? We came in and we inversed it right there. Now, this is very key and very important, and I want you guys to pay attention to this. Notice how we inverse this one and continue to move up out of it. Now, should we have shorted right here and put stop loss right there and get stopped out? No. You know why? Because like I said, these are fair value gaps that are stacked up. We have two fair value gaps on top of each other. So in order to have a move to the downside, one thing that we have to look for is both fair value gaps getting inversed. Okay? Just because this one got inverse doesn't mean that this is a bearish trend at the moment. We have to wait for this one to get inverse, then we can have a small bearish trend. So what do? We stay patient, we wait for that to get inversed right there, and then we wait for a little bit of a pullback, which is this right here, which is this fair value gap that got respected. As you can see, this candle wick right here came in and respected the fair value gap. So that to us is a little confirmation that we can short it out of this and then potentially take profits down to there, right? That can possibly be a trade. Now, it might look a little confusing because of all the wicks, all the candles, but I'll draw it out for you guys so you guys aren't as confused. Let's draw it. Let's draw one. So, uptrend, fair value gap. Inversed right here. Now, what do we got to wait for? Can we short right here? No. Why? Because we have to wait for a retracement. Where does that retracement come in? This fair value gap right here. And then we're able to long it. I know, I'm sorry, that looks really confusing. Let me do it with different colors so you guys can tell. Okay, boom. Right, boom. And then boom. And then boom. And then boom. And then boom. Right. About to get real arts and crafty here, boys. Oh, wrong color. so garbage. Okay, sorry. Boom, bam, 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 bam. Okay. Where's our fair value gap? Right here. There's our fair value gap. So what do we look for? We look for price to come in and essentially shoot down out of it. That's not realistic. That's realistic right there. Okay. What did price do? Price came, closed below it. Okay. Now we're forming a downtrend. Now we're forming a downtrend. In order for this downtrend to get respected, we have a fair value gap right there. We have a bearish fair value gap right there. So we trade into it, and then boom, we short it. I'm sorry. I know it's like really confusing, guys. Like, I don't expect anyone to get this first time. It took me a really long time to actually learn basic fair value gaps. But let me write it out for you in the easiest way possible. We're going to use a little bit of a green candle right here so we can show that this right here is an uptrend. We're going to use green so we can show that this is an uptrend. Okay, and then over here, we're going to use red to show that this is a downtrend. Okay, so then I'm going to type out inside here, inverse fair value gap. Why? Why is this considered an inverse fair value gap? Because price came in and closed below it right here. Let me move these out the way real quick. Draw red right here, because now we know that we are in a downtrend. Okay? Just because we come below the fair value gap and we inverse it does not mean we can immediately enter into shorts right here. We cannot. We simply cannot, because we need a form of respection. We need a way that this fair value gap this inverse fair value gap shows pure respection. How do I mean respection? If you guys can tell that right here, I will draw out in red. This will be red. Why? Because this is a bearish fair value gap. So what do we have to wait for? We have to wait for price to come up into it and then back down out of it. That way we have a better entry right here, and we can set stop loss right here, and we can set take profit down there. Okay, the reason why we need that is because fair value gaps are orders getting filled. Fair value gaps are confirmation confluences. Okay, so we have to confirm this change in trend. Just because we inverse the fair value gap doesn't fully mean we change the trend. It means we change trend. But how are we going to confirm that we change trend? We're going to confirm that we change trend by orders being filled. Okay? We changed trend because we came out of the box. We changed trend because we came out of the fair value gap. Then, what did we do? We respected this fair value gap. We respected this fair value gap right here. Okay? We came down. Bearish. We were bullish. Now we're bearish. All right? Now we're moving down. We're entering in shorts. We're going to the downside. What do? We see we had to wait for a pullback. Price is moving. Okay? We formed a high right here. We formed a low right there. What did we do? We formed another fair value gap. This is a bearish fair value gap. This is fair value gap that we're looking to keep trend to the downside. What did price come do? Price came in, traded into the positive bearish for value gap, respected it, and now we're moving down, and now we can enter in shorts. Simple as that. I will type it out step by step for you guys to write out. First, we are in uptrend. 2, bullish for value gap got disrespected. 3, inverse for value gap. 4, now in downtrend, now in bearish trend. 5, wait for a retrace to confirm the change in trend. There you go. There you go. Simple as that. We were in an uptrend. What did we do? We saw a bullish for value gap. That bullish for value gap got disrespected. That means it turned into an inverse for value gap. Inverse meaning disrespected. Disrespectation, bullish for value gap. So now we're in bearish trend. In order to respect bearish trend, we have to wait for a retracement so orders get filled and we can confirm that the trend is taking place. I cannot simplify that further enough. That is the easiest, most simplified fair value gap you will ever see. All right. I hope you guys learned something. If you have any more questions, feel free to drop them down in the comments. I'm glad if you stayed this long and you really learned something. But always remember key takeaways. Inverse fair value gaps can only be respected by a retracement. Inverse fair value gaps are confirmation confluences. That means we use them to confirm the trend that we're going in. Inverse fair value gaps are a form of manipulation. Inverse fair value gaps are not always bad. It might sound bad, but it's not always bad. Inverse fair value gaps can be used to continue our bias trend. And that's essentially all that you need to know. Right? Oh, one last thing. Stacked up fair value gaps are only disrespected if the last one got inversed. Okay? Stacked up fair value gaps that are stacked up. Let me draw it out real quick so you guys don't get confused. Boom, 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 boom. Okay. Stacked up fair value gaps right there. They are only disrespected if price shot down through all of them right there. That's the only way that's the only way stacked up fair value gaps are disrespected. If price came down to the last supporting one. Because this is bullish trend. This is our last supporting fair value gap and price shot down through it. So now we would see something similar to this. Now we would see price do something like this. Okay? That's your stacked up fair value gaps. I hope you guys really learned something from this video. I hope this video was really helpful for me. First time learning how to day trade. For value gaps were really hard for me to understand. I tried simplifying this in the easiest way possible for any beginner. I'm glad if you stayed this long. I hope you guys really learned something. Stay tuned for the next videos. We should have a vlog coming out pretty soon that I'm editing in the moments. And we will be overseas going into the next couple of weeks. So trading and the videos might start to slow down a little bit, but we'll still come in with more trade recaps. We'll come in with more confluences that I use on a daily basis. And overall, I'll help you guys build your own strategy towards the end of the 2026 year. Thank you for watching. Peace and love always, and I'll catch you in the next one.